All right, good morning, everybody. Let me check if the live chat will work. If not, that's all right. I'll monitor it on my computer. Welcome back, everyone. Another weekly Bitcoin chart analyses. All right. Oh, I got things making noise around me. Also checking the live stream here, making sure everything sounds good. I am doing this vertically, so if you're watching from your phone, you could just watch vertically. Okay, looks like I got the live chat going here. Let's see what's going on. All right, let's say hello. Test out the live chat. Oh, the live chat is showing up on the vertical. That's interesting. Okay, good. That's good. And then I gotta make changes to the live stream description because I'm doing this on mobile, so forgive me. Bear with me, all right? We're gonna take a look at the weekly chart. This is the weekly chart. This is what it was from last time. So I haven't changed anything. There's a Fibonacci retracement line, but I'm not using it as a Fibonacci retracement line. I'm just using it to indicate the range in price from 2 points from the last live stream. It looks like we have gone up. We've broken up here. Hold on here. I'm still... Nope, that's not it. I'm still making changes to the description here. And once I do that, I'll go ahead and talk about the weekly chart analysis for Bitcoin. There's actually been a lot of things going on. I'm not sure what the rise in price is, other than maybe some technicals. Maybe it has to do something with Elon Musk buying Twitter. Maybe, I mean, it happened during the same week when that happened, but I don't know. Stock prices, traditional stock markets have gone up as well last week. Anyway, this is Monday, the 31st. All right, Monday, 31st October. It's about 11:25 a.m. where I am as of recording live. I'm making just a few more changes to the description in the live stream. All right, I think I'm good. I think I'm good. Okay. All right, excellent. All right, so let's take a look here. So what happened? Well, if you've seen some of my previous live streams about my chart analysis, you'll know that I did anticipate a price to go up, but it took almost 4 to 5 weeks before the price actually moved up. Now, last episode, I think last live stream, I talked about being with, I guess, putting a trade, a possible trade if it breaks out of a range or below a range. And that's why I have Fibonacci lines here. So it looked like it broke above 20,469. And the thing about the weekly chart, it did stay above that price, and the candlestick did finish higher than $20,469,000. The red candlestick you see is literally Monday. It's Monday, so we're getting a new candlestick, and the price has gone slightly below it, or at 20,469. So I still have a negative sentiment overall, but short term, it looks like it's decided to pop up in price, which it took about more than 4 weeks. It took about 6 weeks to do that. I do anticipate the price to go up. Um, I don't know if it's going to get to 23,000. I suspect not. I suspect it's going to come in between 23,000 and 22,000. Probably that's probably where it's going to stop. Um, if it can, if it breaks to the point of 25,000 where you see the yellow line on the top here, and let me see if I can get a stylus and move around here. Can I move around? Okay. All right, let me refresh this. I don't want a price alert. I want to clear that. I don't know why it does that all the time, but so right about, let me move it over a little bit so you see it. Okay, so right about, oh, didn't want to do that. Right about there, 25,000, and there it is again. I want to clear that. I don't want that. Okay, so right about there, you see that yellow line. That is a moving average. It is a 30 period moving average. I don't think. I don't know. I don't think it'll go up that high. I'll be surprised if it does. If it does, that's a very good signal. So, but I'm a little cautious. You have to. I do make predictions, but if you've seen my live streams, you know that most likely you're going to be wrong. There's like a 66% chance you're going to be wrong, and only about a 33% chance, probably even less, that you're going to be right. So, uh, so far, have I been right? No, not at the time of my predictions. The price has gone up. My initial prediction a very long time ago that the price would break up. It's not really breaking up. It's starting to break. If you look at the yellow line at 25,000, that's probably the top limit in which the price is going to go up. If it goes beyond that, I may have to revise my perspective, my analysis. So if it does go that way, it's possible. It's possible that could be the first signal of the trend going back up. It's possible, but I'd be very cautious about making any massive purchases. The second thing that I'm going to look at is how far back it's going to pull back. And so if you look at the white line, which is right about here, see the white line is right about here at 20,117, right about there. Let me refresh. Let me clear I want to clear this out. It's distracting. All right, let me refresh it. So that is a 10 period moving average, and the 10 period average could be a supporting price, a moving average, a support for this short-term kind of a dead cat bounce. We'll see how much of a bounce. I do think if this is a dead cat bounce, it'll bounce very small, and then roll over and go down a cliff. Short term, it probably is going to go up. Probably is. It has gone up. Question is, how far will it go up? And if you played the momentum trade on this, is it good enough for you to for your trade to work out in your favor? So my last live stream, I talked about staying between, well, not staying in between, but watching where the price is between 2 points, which was at 20,469 on the top side. On the bottom side, 18,157. So it looks like the price has gone up. And if you've taken a momentum trade approach, a breakout momentum trade going up, You probably your trade got activated, so to speak. Question is, what would you have as a stop loss at this point? Now, typically, what as far as I know about momentum trading, is you would take the average of, I think, 13 weeks and the average of how much the price has moved, and then that would be your stop loss. Now, you don't have to be 13 weeks. It could be whatever, 10 weeks, 2 weeks. It could just be your judgment. So whatever that is, that would be your stop loss. You wouldn't add on to the trade either. So I think, no, I think what you do is you would take the average price movement and you would add on to that, and that would be your stop loss. So times 1, times 2, times 3, whatever you want to do, because of volatility and whiplashing. And as far as your next price to purchase, if it continues to go up, it would be the average price movement divided or at the price movement, whatever you want to do. So whatever it is, some people like to play with the numbers a little bit. Some people have a fixed way of doing it and they keep it that way. What I've noticed about momentum trading is you'll probably have a lot of losers. You will lose on your trades. You're not going to be right on your trades most of the time, but then again, you're taking a very small risk compared to the potential of making huge gains. Another thing is, when you do trade, you only want to trade maybe about 10% of what you have available to trade. So if you have, let's say, $10,000, I'm just rounding a number, you only want to trade about 10% of that, make that available. So you would only be trading $1,000 worth. In other words, if you made your first trade, you probably made only like a $250 trade, with maybe 5 potential more areas where you could add on to your trade up to $1,000. A couple reasons you might hit into what is it, a limit call, or have your trade called on. So you can only, that's if you do shorts. Longs doesn't really matter, but if you're short and the price moves against you and it's sucking up the amount of money available, I mean, your losses are equating to more than the money you have available, you'll get a, what to call, a margin call. That's right. You'll get a margin call if you do a short. If you go long, I think it's just a matter of what the value is worth. If you only bought 250, well, if it goes down, it's only $250 worth, which is probably about the 10% of what the current price is anyway. So it wouldn't be too bad. I guess at that point you would just huddle. You would just take the loss on that and just throw it in your pile and just say it's a huddle. So that's one way of looking at it. Or you could just exit out of your trade at a stop loss. But so what typically on a momentum trade is you would keep adding on. Right now the price has retracted. It has retracted a little bit. Would you exit out of this trade? No, not yet. You need to probably give it a couple more weeks until it hits your stop loss. Or if you want, you can have a trailing stop loss on your first trade if it doesn't work out. That way you can limit your quote-unquote losses. But your first initial trade should be a very small amount proportionate to the overall money that you have in your trading account, if you are trading. Which, by the way, I do not recommend to trade on exchanges. I do not recommend trading on exchanges. But as far as I see right now, this is a weekly chart. The price is above the 10-period moving average. And if it stays above the 10-period moving average, I think that's a good signal. That's definitely a good signal. I think it's a good holding signal if you want to huddle. Um, it probably, if it stays above that moving average, and I'll show you what I'm talking about. Right about here, right about at 20,000, right about at 20,000, somewhere around there. That's the white line 10 period moving average. Let me refresh it, get that out of there. And so, as long as the price stays above that, that's a really good signal. The price will probably continue to go up. Not only will it continue to go up, you could see that potential breakout that I originally was talking about. Oh my goodness, was it 6 weeks ago when I made my first video? So, it looks like we're getting some price action, some price movement. It was getting compressed as far as the price range. It's finally broken up, or it's breaking out, going up, uptrend. How long will it last? I'm not looking very optimistic. I'm thinking it's only 23,000. We'll see as time goes by. So far I've been a week off in my prediction as far as timeline. So when it would break. Also, I've been almost 2 to 3 weeks off on the price direction. So I don't know. The thing about predicting a weekly chart is you can make the right call, but you could be off by 1 or 2 or maybe 3 weeks, sometimes even 4 weeks, which is a month. So you have to change your strategy based on what's happening, but there's always like a delay when you're on the weekly. The problem with any indicator, any price prediction, any price movement prediction that you use, whatever system you use, they're not predicting the future. You're predicting the future. What a system does for you, a trading system or trading belief, it just helps you make a determination on whether to take a trade or not. Unfortunately, it doesn't predict anything. You're the one predicting. Um, you have to always readjust based on current price action. And remember, the price itself is an indicator on top of the moving average, on top of your fib lines, on top of your lines, on top of the trading volume and any oscillators or RSIs that you have. So keep that in mind. The first and most important indicator is the actual price and where it is. So keep that in mind when you do trade. Anyways, what do I think is going to happen? I think, so I'm going to wrap it up. It's going to be a short live stream. What I think is going to happen is basically it is going to continue to go up. I think top side 23,000, extreme top side 25,000. But I don't think it's going to last. I think once it hits, if it gets close or closer to the 30 period moving average, which is that yellow line right there that you see, most likely it's gonna come back down. My overall long-term sentiment is still bearish. I do think it will fall below this current low, which is at 18,157. And then once it does that, I think the bear market may be over at that time. And you'll go into a very long ranging period where you'll get whipsawed going back and up and down, up and down. It's going to be really hard to decide what the price action is, where it's going, because it's kind of bottoming, but it's not in a bull market yet. I still think by next year, November, we'll start seeing the first indicators, the first signals for a bull market leading up to the halving. And as always, hodling is the best strategy. Just hodl. Take your coins off the exchanges if you are trading on the exchanges. If you're trading peer-to-peer, Um, you know, you're obviously going to be hodling. Secure your wallet. Um, just have a strong password to your wallet and just hodl. Hodling is probably going to be the number one best trading strategy. Despite me talking about prices going up and down, hodling is just going to be the easiest and probably the most profitable trading strategy that a person can have. And if you just hold for 5, maybe even 10 years, you'll probably be doing very well, very well. Anyways, I'm going to leave the fib line here, and I want to see how much the price moves up or down in comparison. If you see my last episodes, my previous episodes, you'll know that I already drew the lines. So technically, we are breaking above the trend line. All right, the long-term trend line, and so uh, there is an indication that is an indicator that the price is starting to bottom. But let me tell you, in my experience, that first point, that first moment where you get the trend line, the long trend line. Let me see if I could draw it out. I may not be able to draw it out, but let's just pull it. There we go. So you see me draw the long-term trend line, and you can see where the Fibonacci retracement lines are going back to where before the bull market started back in 2021. So we're pretty much very close, I think, to a bottoming of the current bear market. I do believe that. So if you look here, typically, if you draw the trend line from 69,000 to the next point, which would be right about here at 48,000, if you draw a trend line from those two top points, it would come out to be, oh, didn't want to do that. Okay, it would come out to be right about, I did it again. Okay, well the trend line would hit right where the price is breaking and it's going above the trend line. But in my experience, it never, that's not the signal indicating that the bear market is over. That is just a signal to indicate the possibility that the bear market is bottoming. Usually what happens is it'll break the first trend line from the all-time high to the next top point at 48,000. And if you draw those two trend lines, it's just breaking that trend line, and it may go above it. I don't know, probably to the moving average of the yellow line, and then from there it'll hit another low, a lower low, and after that it's just going to range in price. And by then, nobody's talking about the bull market that's coming. There's no videos out there that'll ever talk about Bitcoin trading or any cryptocurrency trading. Maybe you'll see some spikes or dips, and then somebody will come on YouTube to talk about why the price dipped or why the price went up, or if there's some news related to it, why the price is going up or down. They'll make a video. Other than that, they will never talk about the long term, all right, that we're going to be in a very range trade leading up to a bull market in November, probably going to start leading up to the halving, and then shortly after the halving, you'll hit another all-time high, which, if you see my previous episode, I mentioned about maybe could be up to 150,000. Optimistic, high side 300,000. So that's my long-term prediction. I'll most likely be right on the long term. Short term, man, it is really hard to predict the price of Bitcoin because there's a lot of factors. And even though I've predicted some of my predictions were not immediately correct, eventually they kind of do happen. Just to let you know, I don't have any skin in the game. I'm just giving you my experience from watching the price, chart analysis. I have no skin in the game. I do not trade. I recommend not trading on the exchanges. I think it's foolish to go in and out of trades. But if you're bored and you like losing money, then yes, go ahead. Open an account at one of these exchanges. Trade in and out. Try to make quote unquote money. You should really, at this point in time, be making Bitcoin. You should be trading to gain more Bitcoin, really. And then when you start hitting the top, then you should be trading to get more money, because everybody knows once we hit the top, it's going to go back down again. It's a cycle. It's a constant cycle. The only difference between the previous cycles and this cycle that's coming up is if there's an overall recession, a world recession, and possibly depression, how will that affect the price of Bitcoin? That's the only thing that is uncertain, that is new. And every time you think you got it, every time you think you know what's going to happen, there's always a little curveball that's being thrown out at you. And this time it's the global recession that's coming up. So with the global recession coming up, I don't know what's going to happen with the price of Bitcoin. Will it shoot up? Possibly. My predictions have been 150 to 300,000. It could also just not do much. It may not even come close. It may do nothing. So only time will tell. But the best strategy is for long term is to buy and hold, HODL, put it into a offline wallet, and leave it there. And that's all you have to do, and go about your life. 5, 10 years later, go back to it and take a look at it, and if it's worth using, use it. If it's not, you could hold on to it a little bit more, hold on to it. But the best strategy is really to buy and hold, to HODL. HODL for the long term, HODL forever. That's really what the best strategy is. Anyways, I'm going to end the live stream here. Thanks for watching, everyone. Give me a thumbs up, a like, share the video. And also, I do this once a week. Let me get rid of this thing here. Let me get rid of that bell real quick. Thanks for watching, everyone. And next week I'll be back again when I get a new candlestick. So let me zoom in here for the new week, just so that you see. So recap: price will most likely go up. The question is, will you add on to your trade as the price go up? I would recommend that you would. Most likely, it's probably going to be a loser if you're doing a momentum trade. That's just my personal opinion, because I do think the price will make another low, and then after that, I think we'll be in a period where you're going to be ranging in price. Anyways, thanks a lot, everyone, for watching. Appreciate it. I'll catch you all next week. Have a good day. Bye.